Hey guys, DJ from PTA. I'm going over a trade, Imux. This was a multi-day trader, so this is the reason why the video is coming out a little late, because I wanted to kind of give you a complete breakdown analysis of how I was looking at this trade from start to finish. Solid trade. Definitely left a lot on the table, left a lot of meat on the bone, as they would say. And I'm okay with that because I played the way I felt was best and prune it to my time schedule. So I wasn't able to really be at the charts as much as I would like on this particular trade. I saw it develop, I saw it come along. I got in pretty good on my entry, and it allowed me to be able to let the trade kind of move and manifest the way it needed to. I did get a really big bulk of my trade off on the second day. The third day price action, I just pretty much completely missed. But I did get the second day, got majority of that, and for the most part, it worked out pretty good. So I'm gonna break down the analysis of the trade from start to finish so that you can kind of understand. I'm trying to do this early in the morning, uh, before the market open, just so you guys can kind of see, and then see if tomorrow, or today I should say, October 13th, that it actually manifests. So this trade is going to discuss from October 10th and then October 11th, as well as October 12th. So it's like a three-part trade. The last day I didn't trade, which will be the 12th. We're coming into the 13th. So I want to kind of give you an analysis of where it would possibly go between today, the end of the day, so on and so forth. So ultimately, again, I left a lot on the table just because of how the trade manifests. But this tight price action that it had on the second day is what really caused me to just say, hey, I'm going to cut it. So when you're looking at your analysis, the biggest thing I was looking at was this area here. And we're going to draw this with the light blue lines here. This was a critical area, this 517, 520 area on the first day. But moreover, I was looking at, this potential area here, between here and here, around this 589 $6 area, $6 whole area, because this was particularly an interesting area because it was a whole number as well as the gap fill. And then with further analysis, you would have drew your line here for this support, and then you would have had this little area here for the breakdown. So these started to add or started to include your key areas of interest, or where the stock was coming to. So let me extend this to the left, because that supports that right there. So you see this bunch of price action here. It bounced left from that area, came back, retraced in this area, and pulled down. So that 830, 832, we'll just call it 830 area, was very critical as well. And then we had some a bit of support here and a bit of rejection. So right here became a good area as well. This 1030. Okay. And then you had let's see something here. You had this area here. We'll just call that 12, the 1230s or whatever, right there. Let's see something here. And so it bounced, came off of here, rejected. So these all became really, really good areas of support, resistance, so on and so forth. So this is all off the daily. Now, ideally, you draw your lines all the way up on the first day of the break, which was on October 10th. Now, let's go back down to a 5-minute, and let's look at that first day. So that first day price action was right here. So we had this and then we had this pullback. And when that happened, it set the tone of which way it's going. So it was a really slow grind up into the stock. So I began to get a little confident because I was looking for the $6 push. So I end up getting into shares right around. Remember, we're gonna paint this green, show my price entry. I got my first fill at 548. So I got in about right there, and I risked to here. So, I'm looking at a 10, 12 cent risk right here. And it just kept slowly grinding up. It hit the 6, pulled back, and it kind of just stayed in that area. So I didn't really have a reason to sell. So I kind of just, let it play it out. Now, going into the last 5 minutes of the day, I took a couple shares off in the sixes. I think it was 610 or something like that, just to size down for the day because I didn't want to hold a big position overnight because I wasn't really sure how it was going to play out. I wasn't really confident that it was just going to take off. I had some thoughts, but I didn't really know what it was going to do. The news was decent. It wasn't nothing spectacular or anything like that. But the biggest thing was like protecting myself. So it's kind of one of those situations where like, hey, I'm already in the position. Let me go ahead and realistically take some profit out of the day. So I sized down about a quarter with a really top stop loss at 548. So I figured since right here was starting to build some support at 556, let's put my stop around there. So obviously, it clocked out going into after hours. So we got a little bit of sideways price action. We had this breakdown, and then we had this wick. They gave me some confirmation that something was going on. Okay. Now this is going into day 2, which is October 11th. So I'm still in the trade and I'm watching it. And then we just get this big break in the opening. Okay. So it was just like this big massive amount of volume came in right at the opening. Not super strong, because if you go back and look at it the day before, we had a lot of volume on the downside, pushing it down and then the push. But then when you look at it, we had this nice little spike in the morning. So it kept spiking, and kind of went back up. So what happened is that when it came back up and then it started to touch and pull back, I ended up taking shares off right here because this was a price target. I figured 762, it may pull off of there, bounce, and then pull back down. So I took off probably about 75% of my position right here. So solid trade from where I got in at to right here. So I left another little quarter on there. So this quarter position went up, pulled back, and then it yanked up here. And that's what made me end up getting out, because this was just one of the largest candles for the last 5 minutes of the day. So my thought was, it's like, okay, they about to blow the top. So I'm thinking, okay, they're going to blow the top, probably push it up to this 1030 area, and then fade it back, right? So they end up pulling it back. So this is the next day, which is the 12th. So you see how it respected these lines. It came back, respected this 762, 760 area. We'll just call it 760. Came back, respected area, and then continued to climb. So it came back, pull, climb. Now I'm out of the trade by this time, but now it's starting to climb, and then it ripped to 1155. So this came out to be a very good trade that I literally left a whole day worth of price action left on the table. Now looking back, in hindsight, I would have stayed in the trade and held it a little bit longer. I can look at all the technical analysis and say, I should have held. But when you can take the big bulk of your move into a critical area, you got to take it. And then when you get a big blow off like this, I mean, this is the largest 5 minute candle of the entire day of price action. This had the longest range of $1. All rest of the time was just 14 cent, 30 cent. It was just slowly grinding, and then it actually blew off couple day the next day afterwards. So one of the key things I wanted to take away from this is like knowing your X's and areas, because the stock would typically play in those areas, and having those areas ideal, and respecting them, knowing where they're at. They all draw back to the daily chart. So when clients go in and they say, well, look to the left, a lot of traders that understand that concept is what they're saying is that price action wants to return to where it came from, whether it's on the upside or the downside. And remember that previous support acts as new resistance. So those lines or areas of interest is where the stock is actually pushing towards to find liquidity in those areas off that support and resistance, supply and demand zones, whichever way you want to look at it. But those are the key areas, and you need to watch the price action around those areas to give you an idea of where it's at. So at a 548 entry, I had already seen support stepped in right off of the daily at 520. You can see this big rejection candle here, where it rejected off of that 520 area and continued higher. Then it did it again and continue higher. And as I started seeing it slowly grind up, when we started to get closer to the top, I don't like really buying the breakout, but per se, but some trades allow you to be able to get in on that breakout and get a good significant push. So when I seen that I had a nice entry, I seen a lot of support in the 540s. I got a 20 cent from the area that is supporting off of the daily. I'm gonna take that trade, because even at a 28 cent area, you still safe. You still don't have that much downside relatively to the movement. And this was a slow grinder. I mean, it literally grind for the next couple of days up to where it's at right now. So do I think it can continue on? Possibly, because what has happened is that we don't have a lot of liquidity in this market on the upside. The market's getting hammered. Everyone's looking for a play to go higher, and this has a potential to do it. Every day it has closed a little higher and broke out the previous day high each day. Now this being the big bulk of the day, but each day it has been higher. So them taking it into a higher zone pre-market, and then as you can see, it's respecting the 1030 area. I believe, we may get a pop back up to 1230 in the fade. We might get a pop back up into pre-market, which is currently right now, into a fade. This might be a great fade the next day, which is October 13th today. This might actually be a pretty good fade. It may be if it's exhausted. I don't know. If it gets over 1230, now you're looking at, a potential, move 1230. You looking at it coming back up to the 52-week high. So it's something that, you want to take a look at. And this is the zones. This is right now. It's already here in after hours today. So it's sitting around 1040 something. So it's already here. So if it starts to use 1030 as a support, then you can look at a 1230 takeoff or position to look at where it may go to. Another factor you can take a look at is, a lot of people use Fibonacci. I'm going to show you how some traders look at this as well. And the reason why you want to know these things is because you want to see the bulk of what people are using as far as indicators and all that, to get a consensus of what they're seeing. And if it correlates to your strategy, then you have conviction and support in those areas that you're looking at to follow through. Excuse me, to follow through on. So the biggest thing is making sure you get that type of conviction. So for instance, if we look at this, we had an extension here, and then what that allowed, let me show you a different way, because that was actually a retracement. Let me show you the extension. So the extension was like this. You can take it from here to this point here, back down to here. And as you can see, eerily, this stock pulled, came back up and hit 1155. I mean, it hit it perfectly and then pulled back. So even if you use an extension to see after it had did its pullback, you can actually see the price target. You could have took a little bit off here. Every price target outside of the 38.2, it pulled back on. It pulled back on the 61. It pulled back on the 78. When it finally got over 78, it pulled right off of the 1044. Now look at the price. The high was 1043. The price target was 1044. It pulled right off of that. And then it went straight to 1155 and pulled off of that. So if you know that there's traders using extensions, using Fibonacci extensions and retracements, then you can get a consensus of what everyone is looking at and understand that, okay, this is what people are thinking. That coincides with my strategy and what I'm thinking. I need to get into this trade. I need to do this. So like when you go back, let's move this out the way for you guys. Let's go back to the first day. It's the same thing. You know, it went here, pulled back, and then hit here. And as you see, every time it hit the 50, it pulled back. And then it took off, hit the 78, pulled back. And then as soon as it hit the 100, it pulled back. So the 100 was at price at 625. The high of this candle is exactly 625. So you can use these different elements, Fibonacci retracements, extensions, and all those different things to add to your conviction of wherever you think this trade is going to go automatically. Because then if it aligns and other people see it that way as well, then they're going to place that trade based on those things. Now, you know, you can obviously be wrong and you don't use just one thing, but if you're using price action type of indicators like support, resistance, Fibonacci's, different things like that, you can build a very good consensus into a trade before it even happens. So you already know, okay, this is what I'm looking for. If these things line up, I'm getting into this trade. And then you just continue to do that. Even if you want to know how far the pullback was, right here, got your high, you got your low and your high. As always, people will tell you 61.8 and 50 is the ideal area of a pullback. So if you go back into excuse me, to a 1 minute, you can realistically see, okay, this was the pullback. It pulled right off of the 50%, came back, respected it, and then continue on. So you'll know what your risk to reward is. You know where your areas is. You know all these different things. This is what these people are using collectively in the market. So if everybody's using it, not everybody, but let's just say a vast majority of traders are using Fibonacci retracements, Fibonacci extensions, and stuff like that to place and hit targets. And you can see that, you know, I just showed you on a couple examples just on this chart where if you knew what the 50% area was, what the 61% area was, you can get an idea what the extension was on that and be able to place that trade confidently and let it go. And then, like I said, I got in about right here and it ripped. And I just held because I didn't really have a reason to sell. You know, I was looking for the $6 bust. It didn't happen. but it didn't terribly pull back or anything like that. It didn't even come close to my entry. And then when it actually did wick and then hold, I took a little bit off, but respectively, I mean, you don't know which way it's going to go. So if you hit your price target, cool. I was looking for 6 and beyond. So anything above 6, I felt I was doing good, and let's go ahead and get it instead of, it pulling back on you and you break even or something like that. Take profit when you can. But overall, pay attention to these key areas. Pay attention to the support and resistance, and you'll ideally find a really good trade that you can build on and build a nice size position. So guys, I hope this information was able to help. Click the like button, hit the subscribe button so you don't miss any of the videos, any of the content that we're putting out there. Visit the Discord. A lot of great new traders in there. I welcome them all. Leave me with your questions, comments, all those different things. And as I always tell new traders and old, stay studying and stay focused.